Have you ever noticed how sometimes big announcements from companies don't always make their stocks go up, but instead push it down? Because that's exactly what happened to Apple right after its much-hyped iPhone 17 launch event. On 9th of September 2025, which was last night, Apple held its annual fall event, revealing its latest iPhones and other gadgets. Millions of fans tuned in, eager to see what surprises Apple had in store for them. But instead of sparking excitement on Wall Street, Apple stocks fell right after the event. But why did this happen? Let's break it down in very simple words and also discuss what Apple announced, how investors reacted, and what could this possibly mean for the company's future. So let's get into it right away. The September event is always Apple's biggest moment of the year, and this one was no different. The company introduced the iPhone 17 lineup, which included the iPhone 17, the base model with improved battery life, camera upgrades, and a fast chip, iPhone 17 Pro and Pro Max, premium versions with titanium frames, stronger processors, and even better cameras. Last but not the least, the iPhone Air, the showstopper of the event and Apple's thinnest iPhone ever with just 5.6 millimeters thick. Apple also revealed the Apple Watch Series 11, the Watch Ultra 3, a refreshed Watch SE, and the new AirPods Pro 3. The iPhone Air especially grabbed attention. It was slim, stylish, and packed with the powerful A19 Pro chip, plus premium display features like a 120Hz refresh rate. The Pro Max even came with up to 2 TB of storage, hitting a price tag as high as $1,999. On the surface, this looked like another strong year of hardware upgrades, but there was a problem. Most of the features Apple showed off weren't new to the audience. Rumors and leaks had already revealed a lot of details even before the event. So when Apple executives got on stage, there weren't many surprises left. For fans, this definitely meant less excitement, and for investors, it meant fewer reasons to believe that this lineup would spark a massive upgrade cycle. Wall Street was also expecting Apple to lean more heavily into artificial intelligence. Competitors like Google and Samsung have been shouting about AI features in their phones, but Apple touched only lightly on AI, focusing instead on things like better camera, longer battery life, and sleeker designs. So in short, Apple did deliver good products, but not the kind of groundbreaking changes that drives investors' enthusiasm. Immediately after the event, Apple stock slipped. It fell around 1.5% to close at about $234.35, and later figures showed a smaller dip of about 0.24%, ending closer to $237.31. This wasn't a crash, but it was a clear sign that investors weren't thrilled. And it followed a familiar pattern, a sell the news reaction. That's when traders who already expected the announcements take profits after the event rather than buying in. In other words, Apple's launch was already priced in, and without any big surprises, the stock edged lower. Another factor weighing on Apple stocks was costs. Reports revealed that Apple had decided not to increase iPhone prices this year, even though new tariffs on Chinese imports cost the company around $1 billion. Instead of passing the cost on to customers, Apple decided to absorb it. That's good news for buyers, but for investors, it means thinner profit margins. And profit margins are a big part of how Wall Street values Apple. So in short, Apple is making its customers happy, but the stock market is still worried about its earnings. Strong phones, but no surprises. The new iPhones were solid, but leaks had already spoiled most of the review. Little focus on AI. Apple barely talked about AI, while rivals are making it the centerpiece of their products. Tariff costs hurt margins. Apple is paying more without charging customers extra, which cuts into profits. That mix made investors cautious, and the stock slipped as a result. Apple stock has been moving sideways for months, stuck in a trading range as investors wait for a catalyst. Analysts say that a breakout could happen if the stock pushes above to $60, which is basically a key buy point. Even if the event didn't thrill Wall Street, it's still important. Every iPhone cycle matters to Apple's bottom line. iPhones alone make up nearly half of Apple's revenue. With premium pricing like the $1,999 Pro Max, Apple generates revenue growth even without massive sales volume. Apple's iPhone 17 launch was polished, well executed, and full of small but meaningful improvements. Yet in the eyes of investors, it lacked that wow factor, which is the one big reason why stocks fell despite strong products. But don't count Apple out. Its loyal fans, premium pricing power, and the ability to innovate when the time is right still makes it one of the strongest companies in the world. But the next big question is, will the next launch event of Apple bring surprises that the Wall Street is waiting for? What are your thoughts about it? Let me know in the comments down below.